there, Evan here with Crypto and Markets for Tuesday, May 29th, 2018. Just wanted to go over a quick headline for you, as well as a quick chart. Firstly, this one's at a better dwelling yesterday. Canadian mortgage growth grinds to a halt, slowest growth since 2001. The 3-month annualized trend is now growing at only 2.2% year over year, which is the slowest since 2001. Now, what do we know? Home prices are now negative year over year in Canada. Home sales are declining. Then you have the stress tests, the new B20 income guidelines on top of that for declaring foreign income. You have a flattening now of the yield curve, which is starting to hurt some of the alternative lenders. In fact, most of them now, to be honest. So essentially, it's a culmination of everything I've mentioned on these videos, really for about the past year or so. And while I'm on the point of the new B20 income guidelines, isn't it kind of funny how in Van City condos, as soon as CIBC ended their foreign investor program, as soon as the new B20 guidelines are put into place, the Vancouver condo market looks like it's topped out in price? It's kind of funny, right? Well, someone in the comments section of one of my previous videos yesterday, I guess they're a new subscriber, new viewer. Thank you so much for your support, by the way. But they also brought up a great point that really I hadn't thought of. I brought it up in previous videos, but I think it kind of plays here. Remember when I said, even Steve Soretsky was mentioning this too, by the way, the great real estate agent out of the Vancouver area, talking about how locals were acting under the optical illusion that the foreign buyer was still there. Well, when that CIBC program came to light, I think what's honestly happened now is people are no longer acting under that optical illusion. I think people have waken up and finally started to see what's really going on there. So I think overall, if you follow the channel, followed other channels as well that have been on this, I think that's what's starting to happen there. So something for you to keep in mind. Lastly, if you remember this chart, this is the current oil price being overlapped for the 2008 oil price at current levels. This is where we are now. Look at this. If you just look at this chart itself, and I mentioned in previous videos, oil is having its 2008 moment when it was going up. Look at that correlation there. And look where the price could end up below. Just under $20. Now, I don't think it gets that low, but it's something here to keep in mind. Yeah, I know that OPEC made the deal where they're going to make up for Venezuela and Iran. In fact, they even tweeted out a few headlines last night, how India is not going to go along with the sanctions. We already knew that China wasn't, so Iran's just going to cut back whatever it was to Europe. The rest of OPEC Plus makes up for Europe. They expand their exports into Asia. Net, there's no loss to anybody, so OPEC Plus or not, you know where you stand on that. There was going to be demand destruction from a slowing economy, which you're already starting to see in the emerging markets because of the strong dollar. It was ultimately starting to work its way through Europe. It's also just now starting to work its way through the U.S. as well, too. If you notice, product demand, year-over-year growth hasn't really been that strong lately. So I'll go ahead and just quickly leave it here. Hit the like button, leave a comment down below, subscribe, and follow me on Twitter at CryptoMarkets2. Y'all have a good day. Bye.